We have just completed our asset allocation framework for Q3 2019, informed by our quantitative team at Northstar, as well as our bottom-up fundamental team, stock selection team, with some very interesting results for this quarter. As far as fixed income is concerned, we have had quite a high exposure to long duration fixed income investments in our fund over the last year, and felt very positive about SA fixed income. However, currently we see limited value in short duration fixed income investments and very good value still on the longer end of the curve, particularly past 7 years. With respect to property, our view really hasn't changed that much. We've been consistently negative on SA property for a few years, well underweight our peer group. Reasons are quite simple in our minds. Firstly, vacancies are rising. Secondly, distribution growth is falling, and we don't feel that this is being fully captured in the valuation of property stocks on the JSE. That said, those stocks have performed very poorly, and valuations are improving as we speak. Equities are probably the most interesting area currently to discuss. In April 2018, in South Africa, we saw the upside to intrinsic value on our buy list at about 12%. That has currently risen to 24%. In other words, should all the companies on our buy list re-rate to what we think they're worth, there's potentially 24% in it for our clients. So we've turned more positive on South African equities, having been heavily underweight for quite a while. With respect to South African equities, what we find quite intriguing currently is just the level of underperformance that we've seen from the broad market against inflation over a number of years. In fact, going back over time, South African equities currently have underperformed inflation by one of the 7 worst periods over time. What we find particularly interesting is if you look at the subsequent returns from equities after periods of underperformance like this, the real returns are actually 6 times, on average, 6 times higher than a normal year. Against that, offshore equities in 2018, April, had on our buy list intrinsic upside exceeding 20%. Currently, that's reduced to about 12%. So we've, over the last year, become a lot more cautious on global equities as a result of higher valuations. Probably the most controversial comment we can make around asset allocation is really on the currency. We appreciate that we might have a Moody's change in terms of outlook on the 2nd of November, but our modeling, both from a PPP's perspective, using different periods over time, as well as looking at commodity and interest rate differentials as a spot valuation method for the rand, we get the impression that the rand is actually quite undervalued. And any improvement in the domestic space has the potential for dramatically improving the valuation of the South African rand. It's important to note that the work we did was at quarter end and the currency was at 15.50, and as we do this video, there has been some improvement in the currency. However, we're seeing valuations around 14 Rand as fair reflection for the risks that we see in South Africa.